Welcome to the third episode of CFO Insights. As ever, I'm your host, Roel Boons, and in today's episode, we dive into the world of tax with Pillar 2 regulations and how it affects the CFO and the various parts of his organization. But before we start, let me begin with introducing Pieter de Ree, a partner in our tax practice. Hello, Pieter. And Joni Gekire, a manager from our tax practice. Hi, Joni.
Hi, Roel. Thank you for having us.
Both Pieter and Joni have extensive experience helping our clients implement processes and controls to help manage tax teams with Pillar 2, and are both here to share some of their insights on how and why Pillar 2 should be top of mind for CFOs. Those are insights that they share on a regular basis in their Tax Bites podcast. Now, perhaps the first question, Joni, in terms of Pillar 2 and the Pillar 2 framework, what does it really entail and what does it aim to achieve? And what will be the impact on a business and its taxation, especially the effective tax rate?
Yes, so Pillar 2, there is a lot already said about Pillar 2, but essentially it boils down to ensuring that large groups pay a minimum level of taxes everywhere where they operate. And this minimum tax is set at 15%, and it's based on a very complex set of rules and complex calculations. But in the end, it aims at having a large group paying at least 15% of taxes in every jurisdiction where it operates. And for large groups, the reference is made to a consolidated revenue of more than 750 million euros. Maybe on the timing, so the due date for implementation in Europe was the 31st of December 2023. This is also what most EU countries have done, together with other countries outside Europe like Japan, South Korea, Canada. And this means that these rules are in effect for large groups, that's at least for the groups that follow the calendar year. This means actually as from this year.
Yeah, indeed, and actually, already some of these groups have had to disclose some of the effects already in their 23 financial statements, but really it's in effect now. So Joni, am I just correct in just summarizing that the Pillar 2 framework really aims to prevent shifting profits to those jurisdictions with low or zero tax rates, and to establish a bit of a coordinated international approach to set that global minimum tax rate?
Yes, absolutely, Roel. So this initiative, it further reduces the incentive for multinational groups to engage in tax planning strategies or going to exotic locations. Because, as I mentioned, regardless of where they operate, they will have to pay this minimum level of 15% taxes. And also, given that this is a global initiative, this framework of Pillar 2 really aims at having a kind of common approach and a kind of harmonized way of implementing those rules. So this would aim as well to provide a greater tax certainty and stability for businesses. However, I also already mentioned it's a complex set of rules, so it will of course also have significant implications for multinational groups, next to the fact that an additional tax may be required because you do not reach the 15%, so you have to pay something in addition. There will of course be a lot of compliance to do in this case, because even though you would pay the 15%, you will still have to submit a tax return, at least one, to demonstrate that you paid that or to show how much you would have to pay in addition. And for the groups in scope, I think the first actions, we can summarize them in kind of three buckets. First of all, it is a very complex set of rules, so it is important to understand what it means and also share that with the stakeholders within the group to show what is coming. The second one is evaluate how this will then impact the group. Is it only additional cash? Will there be additional cash? Or will there just be compliance and no additional cash tax costs? And then the third one, prepare for those new requirements. Really get ready for what's coming. So this includes assessing what data is now required to make those calculations, to make sure that we pay the 15%, what compliance requirements are there, do we have sufficient technology already in-house, should we consider outsourcing certain activities, should we maybe insource additional resources, Do we have the right processes? Do we have the right controls, etc., etc., etc.?
Okay, thank you, Yoni, for that. So indeed, I hear a lot of questions and a lot of new requirements that are coming out now in terms of being responsible for the whole Pillar 2 implementation and also the reporting thereon. Who is typically taking the lead at the companies, taking responsibility, and also how does the implementation of Pillar 2 directly or indirectly concern our target audience here of today, the CFOs?
Yeah, thank you for that question. It's a very good question, actually. And in the beginning, that these new rules were being introduced, people were looking at it and wondering, what are we actually looking at? Is this a tax requirement or a financial reporting requirement? What is it going to be? Now, gradually, it's clear that in most of the companies I work with, it's in the end a tax requirement, a tax obligation, and the tax department is usually at the forefront of this implementation. That's also logic. The tax department has the information on how the group works, the tax position, has all the information on the strategy of the group, the effective tax rates, etc. So clearly, it is first of all the tax department that looks into these obligations. But Pillar 2 goes way beyond the tax department as well. Other departments are required to get involved because simply the information is needed to have a correct compliance obligation and meet compliance obligations. For instance, let me give a few examples. The legal team is involved. Why? There is detailed legal information needed to have a correct declaration and compliance with Pillar 2. Also, the finance team is involved because the tax department is used to work with statutory local profit and financial statements. But for Pillar 2, they will need to look into group reporting standard information. So the finance team is involved. You need a lot of additional data that the tax department usually doesn't have access to. And another example is, for instance, the incentive team, because to the extent that certain incentives are being obtained in countries for investments or innovation, Pillar 2 will have a very big impact on the effectiveness of incentives, especially if these are tax incentives. So it's also good to connect with the business development team or whoever is responsible for getting those incentives in the group and make sure that they are aware of the potential impact of the Globee rules. So, rule in summary, I think it's mainly the tax department on the forefront, but a lot of other departments are involved.
Yeah, thank you. Thank you for that, Peter. So, indeed, I've heard the two departments, but can we perhaps look specifically also at the CFO's role and his responsibility in overseeing all that? Does he have other crucial roles to play?
Yeah, I think that the CFO overall has a very crucial role for different reasons, because first, he or she is the head of the finance department, of course. Next to that, he or she is also part of the senior manager or maybe the board of directors. And also, he or she has an overall oversight responsibility. So it's, for me, a very crucial role. But maybe, Peter, if you can elaborate a bit on that further.
Yeah, Yoni, indeed, and I couldn't agree more with you. CFO has a very important role in the Pillar 2 debate. As you said, the CFO is, of course, the head of the finance department. So ultimately responsible for Pillar 2, I would say, because of the fact that simply it's going to be the finance department along with the tax department that will have to be complying with the Globee rules and the Pillar 2 rules. Of course, the CFO will probably not be in the details, but will be interested also because the Pillar 2 will have an impact on the financial statements, will have an impact on the effective tax rate of the group, and can have a significant impact on the tax rate in some cases. And ultimately, there will be an impact on the earnings available for distribution because of the changes in the deferred taxes and so on. So as head of the finance department, the CFO has a very crucial role to make sure that all noses are in the right direction and that the right priority is given, I think, to the topic of Pillar 2. But CFO is also part of the board of directors. And also from that perspective, there is an important role to play It's not new that tax information becomes more and more public, and the tax contribution is information that is carefully looked at by stakeholders. So also from that perspective, it's important to see what is this tax strategy that we set as a group, what is our approach to taxation, and how does our approach to Pillar 2 fit in with that, and how do we report about Pillar 2 in our financial statements and to the public. Just to give one example of this importance, within a few years, companies will have to publish the public CBCR information. So public information on where you realize profits and where you pay a certain level of taxes is that same information that is being used for Pillar 2 to a certain extent. So there is a very clear connection there, and connecting the dots is actually what the CFO can do as part of senior management and board of directors. So I would say, in conclusion, for me, the CFO will have the overall responsibility and oversight and the ability to connect the dots between the different teams on Pillar 2, to make sure that, I think, within an organization, the right attention is given to this new development and to this new set of rules. So that's a bit my summary, Yoni.
Yeah, I think this also links a bit back with what you mentioned earlier, that we really need the various teams and expertise to make the Pillar 2 puzzle. So I think that overall, indeed, as you also already hinted towards it, a successful implementation of Pillar 2, or at least to prepare for that, requires really a collaboration, coordination amongst various teams, including tax, legal, compliance, technology, etc., with then the key role for the CFO in that respect.
Thank you for that. So now, typically, not every group has structured themselves in the same way. How do we now see companies structure themselves to manage these Pillar 2 rules? Do they look at it from a centralized perspective? Do they look at it very decentralized?
Yeah, also a good question, Roel. I think the overall approach that we most commonly see is at this moment in time a very centralized approach. So the Pillar 2 rules are a uniform set of rules. If countries implement the Pillar 2 rules, they have to follow the OECD principles. So generally, you can look at it at group level. And let's not forget that the ultimate responsibility for the Pillar 2 rules and the filing lies with the ultimate parent entity of the group, so centralized. So very much the starting point is centralized to gather the data, to make changes to the consolidation system and so on. That's something you do centrally as a group. But I think that the devil is in the detail, and there will be requirements also for local tax returns. So there will be a need at some point, at the right time, to get the local teams involved, to get them up to speed, and to educate them on Pillar 2. And let me give one example that very clearly demonstrates this need for a decentralized approach and a combination with a centralized approach for some aspects is, for instance, a multinational with two large divisions. If you have the situation and both divisions, for instance, have legal entities in Belgium, let's take Belgium as an example. You will look at it from a group perspective, where you have access to all the financial information of both divisions in all detail, and you will be able to file a group declaration with that information. But also in Belgium, there will be a need for a tax declaration. And in Belgium, you will need to file one declaration covering all your legal entities of both divisions. So if you fully decentralize the compliance and the assessment on Pillar 2, the decentralized finance team of Division 1 will simply not have the right information of what Division 2 is doing. And we have seen in practice some major challenges around this. So in the end, it will be a combination of centralized, decentralized. But I think that taking the first steps is typically a very centralized approach to rule.
Okay, no. Thank you for sharing that feedback, Peter. I think it's indeed sometimes something what I've seen on certain of my clients as well, where they've had a very light dry run on 2023, only having to publish what they thought the impact is going to be. But obviously 2024 is here, and and now they need to report. So what are the other implications, or what are the impacts of Pillar 2 on the financial reporting processes for enterprises also in this year?
Yeah, I think the overall implementation of Pillar 2 will be an increased complexity in the overall finance reporting and the reporting process, because the Pillar 2 as a kind of calculation and data gathering, etc., will be an additional piece that should be inserted in the overall reporting process. So instead of only calculating, for example, the local tax returns, there will be additional returns to be prepared and submitted. But I also think about other examples, like disclosing additional information on the tax positions. Will no longer be current and deferred taxes, but also Pillar 2 taxes. Also, the impact on the effective tax rate, other liabilities, disclosure of deferred tax assets, etc. There will be a lot more complexity. And of course, this also requires groups to be even more transparent in their financial statements, which can give as well greater insights to the company's tax practices overall.
Yeah, okay, good. I've indeed heard, Joni, a lot of requirements, a lot of actually new reportings. So in terms of some of those requirements, those reportings, what are some of the challenges that now surround the tax and the finance departments on Pillar 2?
Yeah, well, Roel, if I look at the main challenges, well, it has to do with the data collection for Pillar 2. And that has to do with the fact that it's the first time in history that a complete new tax system is introduced using consolidated financial statements data. Albeit you need to deconsolidate them for Pillar 2, but the starting point is the group reporting standards. And that's very unusual for tax teams. So all of a sudden you need to collect a lot of data which was never collected before in the company. And so that's where the challenges arise for me. And for instance, a few examples, you can have a challenge sometimes from a system setup perspective. If you are having sub-consolidations in the group, imagine my example that I gave on the group with the two divisions. Imagine that those divisions are sub-consolidating and only providing consolidated divisional data to the ultimate parent or to the headquarter. In that case, the headquarter will not have the data necessary to do Pillar 2 compliance, because the headquarter will need for each legal entity unconsolidated financial information and will still not have access to that. So it may require system changes. Another one is often the data quality, which is a problem. For instance, an example, real life case, a group which was collecting, of course, the financial information in the consolidation tool, and then at group level, various changes were still made to that data. Well, from a Pillar 2 perspective, you need to really assume that all the accounting entries have been pushed down to the legal entities. So that is a tremendous exercise in some groups. And well, we do these exercises with a lot of companies, and sometimes, and luckily in quite a lot of cases, we don't really find showstoppers. But every now and then, we really find showstoppers on the data quality or the system setup, basically. And that comes for me with a very third important challenge, and that is to find the right resources. If you need to start collecting this data, if you need to start making system changes, you need a lot of people and a lot of time that you can invest. So on the one hand, the tax team needs to upscale, needs to learn these new rules. On the other hand, also the IT team will need to be available to make the changes where necessary. So it's really one of the biggest challenges is to find the right people and to make sure there is enough time available to work on Pillar 2. And that's for me a very important challenge.
I think an excellent summary, Peter, because I've heard a lot about data here. I've at the same time also heard resource constraints. So perhaps a follow-up question in that sense, can AI not aid in extracting or gathering the data from those internal systems, there's a variety sometimes of internal systems, and facilitate that whole process of gathering the data and consolidating the data?
Thanks, Roel. That's a great question, because actually it is a question that we receive used quite often. And of course, AI has a lot of potential and can definitely facilitate certain aspects of the process and offer workable solutions for data management, data gathering challenges. And I think that AI-driven tools can help companies to automate certain things. But of course, AI also has its challenges, definitely in the first period, I would say, where AI is more available to everyone and and is available everywhere. And these challenges are, for me, mainly linked with the human expertise that will still be required in these kind of calculations and to face these challenges. Because, for example, the mapping exercise, that's something that will still have to be done by someone who understands what the rules mean or to address technical challenges in the right manner. And it will also be essential to validate the AI-generated insights and to validate the outcome that is provided by such an AI tool. Also for interpretation of complex legal and regulatory requirements, I think that we should not overlook the human expertise and the human resources there. And of course, next to that, also AI algorithms may have their limitations. So there are certain types of data that should be labeled or that is in an unstructured format, which may also pose challenges to AI algorithms. So overall, for me, the key is really a collaboration between, I would say, AI systems and human stakeholders, that this is essential to address the complexities and challenges of this Pillar 2 set of rules.
Yeah, and I think, Joni, if I can step in here with an example of how we try to actively use AI and to help our clients and companies is and where I think AI can play a big role is to digest the technical complexity of Pillar 2. So, for instance, if I look at PwC, you and I and are part of this expert group on Pillar 2, representing basically all the countries, experts from all countries in the world. We are building a tremendous, I think, amount of information, of insights in Pillar 2, of analysis. We discuss with each other, etc. And so we had the idea, what if we use this information to let an AI learn about Pillar 2 and learn about the rules. We're working on that. And we hope that we will be able to deliver this to our clients to help them overcome the complexity of Pillar 2. So I think AI can play a crucial role, but I'm also fully with you that for most of the analysis, it will be ad hoc and will require a lot of human intervention. So, sorry, just one example I wanted to add after Joni's explanation on AI.
No, I think perfect that you add that, Peter, because indeed it really just highlights again those data gathering concerns and complexities, as well as the resources that not all the time are available and or need to be upskilled. So great for adding that. Thank you. And thanks just in general also for sharing your insights today, both Joni and Peter. It's very insightful to get your views onto this new regulation and the challenges it brings for companies and the finance department or CFO. I've mainly taken away from this that the CFO continues to play a crucial role in integrating those tax considerations into financial reporting and understanding as well his role in understanding strategic implications and ensuring compliance there. For me, I've certainly taken away that one of those most complex challenges is Pillar 2 and the data gathering that it relates to. So dispersed data quality, data privacy, and some resource constraints. And I've then taken from your example also, Peter, that AI can certainly aid in gathering that data, but that management of AI and human oversight really remain essential also to help address this challenge. I think overall, a successful implementation does require a collaboration between various stakeholders and definitely not the least CFOs. So thank you for sharing this today. And I think with that, we can wrap up and look forward to the next episode. Thanks everyone also for listening.